Let me say something that most people in this industry won't say out loud. The trading space is a mess. There are gurus selling dreams, prop firms collapsing overnight, people posting screenshot profits from accounts they blew the next week, and 70 to 80% of retail traders are losing money. So I get it, I completely understand it. If you never traded and you tried but lost, you look at this industry and you call it a scam. But here is actually what nobody is explaining. And it's the reason I'm making this video. Trading isn't gambling, but the way it's being taught, sold and marketed, that part generally is. People are conflating two different things. The industry, the gurus, the prop firms, the signal sellers, that's a business ecosystem built around trading. And the market, price moving, supply and demand, institutional order flows, that's a separate reality entirely. And here's the thing about markets, they are not random. I know that sounds like something a guru might say, but I'm not asking you to take my word for it. I'm asking you to think about it mathematically. A coin flip is random, heads or tail, 50-50, and no amount of analysis changes that. And the next flip has zero relationship to the last one. Now, the market is not a coin flip. Price is moved by participants, banks, institutions, algos, retail traders, all of whom have intentions, positions, and interests, and behaviors that repeat. Liquidity gets taken, structure forms, imbalances get filled. None of that is guaranteed, but it's probabilistic. And the probability is something that you can study, measure, and quantify, so you can build a framework around it. The casino doesn't win every time. It doesn't have to. It wins because it has a mathematical edge, and it applies that edge to thousands of times to thousands of players. The outcome of any single hand is uncertain, but the outcome over time is not. That's exactly what a professional trader is doing. Not predicting the future, but operating within an edge, across a large enough sample size, with controlled risk in every single position. That's purely applied mathematics. There's one thing I need to address, and it connects to why the gambling comparison exists in the first place. The way most retail traders behave in front of the screen. The constant checking, the overtrading, the emotional decisions, the revenge trades after a loss. That behavior pattern is identical to gambling problems. Psychologically, mechanically, and neurologically identical. But the behavior isn't caused by the market. It's caused by a complete absence of framework. When you don't have a defined edge, when you don't know your value, your expected value, when you're not tracking your results, you're not trading. You're purely reacting. And reaction-based decision-making in financial market will always trend towards ruin because the market doesn't reward emotion, it punishes it. The professional approach looks different. You define your setup criteria, sometimes for days, for the market to offer what you're looking for. And when it does, you execute. You manage the trade according to your rules, not your feelings. You record the result and move on. So remember, one trade is noise. 50 trades is data. 200 trades is proof. The people calling this gambling have never seen 200 trades version. They've only seen the person who took 50 trades in a week chasing losses. And honestly, that person indeed was gambling, just with a chart app instead of a slot machine. And the market didn't make them do that. The lack of education did. Now, I'm not here to tell you that trading is easy. It's not. The learning curve is real. The psychological discipline required is something most people generally underestimate. And yes, the industry around trading has serious problems that aren't going away anytime soon. But the market itself, the mathematics of edge, probability, and expected value, that part is as real as it gets. The people who make it, and they exist, they're just not the ones with the biggest Instagram pages. They are the ones who treated this like a skill, who requires study, structure, and time. Not a shortcut, not a signal subscription, not a 6-week course that promises consistency. A skill with a framework, operated with discipline over a large sample size for the mathematics to express themselves. That's the version of trading nobody is selling because it doesn't sound exciting. It doesn't go viral. It doesn't sell courses to people who want results in 30 days. But it's the only version that actually works. So I leave you with this. Next time somebody tells you that trading is gambling, ask them one question. Ask them what is their expected value per trade, per setup. If they can't answer that, they are right. For them, it's gambling. Drop in the comments. Do you think the industry can be saved, or is it too far gone? I see you in the next one.